So in this video, we're going to be going over market structure and the three phases that the market moves in. So there are three phases that the market moves in. One is an uptrend, downtrend, and then we have sideways movement. So over here would be our uptrend, then over here would be our downtrend, and over here would be our sideways movement. So those are the three phases that the market moves in. So in an uptrend, you're going to have higher highs and higher lows. So let's mark that up. Right here, you have a HH, stands for higher high. Uptrend, you have higher highs, higher highs, higher highs. And the reason why that is because this high is higher than this high, and this high is higher than this high. That's why we say higher highs. In an uptrend, you'll have higher lows. All right. So that is the uptrend. You have higher highs and higher lows in an uptrend. And then for a downtrend, you will have lower highs and lower lows in a downtrend. So now that we see the uptrend consists of higher highs and higher lows, and the downtrend consists of lower highs and lower lows. Some key things to remember is when you see the market coming back like this, we call this a pullback. So it came up, up, pullback. Came down, down, pullback. You hear somebody say the market pulled back into this area. That's kind of what they're meaning. Or we're waiting for the market to pull back over here. That's kind of what they're meaning. Yeah, just some little key thing to keep in mind. When you have sideways movement, it's just the market not having a clear direction or a trending market. So it'll come down here, then go up, and then it'll come over here, and then come down, up, down, clear uptrend or downtrend. The market's kind of just staying in one area. So when the market tapped here again, it sold, and then when it came down here and tapped into this area, it bought. So you'll see that the only time in a sideways movement that I would trade is if I'm either selling at the top or buying at the bottom of where the market is bouncing off at. But anyway, let's get into the market and find some example of these. Market was making its way down. So this was already breaking structure for a downtrend, and this is on the 15-minute, but the 15-minute can have its short-term trends as well as the higher time frames. I see we have it's a downtrend, so lower high right there, lower high right there, lower high right here, lower high right here, and again, the reason why it's a lower high because this low is lower than that high, and this low is lower than that high. So we call those lower highs in a downtrend. We also have some lower lows. LL stands for lower low. So this was an example of marking everything up in a downtrend for lower highs and lower lows. As you see, the ones that I label LH are lower highs, and the ones that I label LLs are lower lows. And that's what a downtrend consists of. And also in a downtrend, when someone says swing highs and swing low, well, this is a swing high, this is a swing high, this is a swing high, swing low, swing low, swing low, swing low. More terminology for you to keep in mind. So yeah, those points are all, those areas would also be your swing highs and swing lows. Look at an example of a uptrend. So in an uptrend, we consist of higher highs and higher lows. So let's mark it up. Start off with our higher low, lows. These are two equal lows, but general higher lows, higher low, higher low, higher low, some more higher lows. Okay. Now let's mark up our higher highs. So that's how we identify our higher highs and higher lows in an uptrend. One thing to keep in mind is I need you to, when you're going through all of these videos, you need to practice finding these on a chart for yourself, marking it up so that you can practice. It's just like playing basketball. If you do not practice, I mean, you're not going to learn it. So you have to practice it on your own. Every time you watch all the videos that are released and are in this coursework, uptrend, higher highs and higher lows. This is how market structure is. And the reason why you want to be able to identify higher highs, higher lows, and lower highs and lower lows in uptrends and downtrends is because when market structure is broken in these areas, you'll know when to, okay, if it was buying, if it was a bullish market, you'll know when a bullish market is turning into a bearish market because okay, let's say for instance, if price decided instead of going up here, it wanted to sell down here, okay, and then come up here and then sell, now we know this is now a bearish market, and it's probably going to come and take out all of this structure to the left side. That's why market structure is important in watching these videos. So when higher lows are broken to the downside, okay, price is probably going to try to sell. And if it keeps breaking higher highs, okay, the price is going to keep probably wanting to keep going up. That's why this is important. And here is an example of sideways movement in the market. So when you see this type of movement where, okay, price came down here and then it's holding this level and then it keeps bouncing off each support and resistance area, basically, you don't want to trade anywhere in the middle because guess what? If you trade anywhere in the middle, now you're just caught in between price where price is bouncing and price has two options. You can keep going up or down. So you would never want to trade sideways markets in the middle. It makes no sense. Like if I've seen this sideways movement, okay, well, I know price keeps selling after it bounces off this ceiling. So I'm only taking sales right there. And for the same thing for buys. Well, the buys keep bouncing off the support area. I'm only taking buys when price comes back to these levels. That's how you want to trade sideways market movement. These are very important to know when you're looking at uptrends, downtrends, and sideways movement. You want to know what type of market that you are in. Are you in an uptrend? Are you in a downtrend? Or are you in a sideways market that's kind of consolidating? It has no uptrend or downtrend um, in it. So always be knowing, okay, what market am I in? What's the trend? But that is market structure. Again, you know, if when you're in an uptrend, you're in higher highs and higher lows. In an uptrend, you're going to see higher highs and higher lows. And in a downtrend, you're going to see lower highs and lower lows. And remember, if you're in an uptrend and you see a higher low being broken, that probably means that that market is now probably going to turn into a downtrend. And vice versa for a downtrend. If you see lower highs being broken to the upside in a downtrend, you could probably expect for an uptrend or a bullish market to occur. And that is how you want to identify market structure.